is bright and early Saturday morning. Yeah, I can't sleep. That's all right. It is October 11th, 2025. This is my weekend update. And this is always for entertainment and education purposes only, of course. Okay, well, we had a hell of a Friday. Um, yeah, hell of a Friday. Mr. Trump here decided that he would come into the market and obliterate it. So, but before we freak out, let's take a look at some. I'm not concerned at this point because whatever's he's has planned with China is going to take time to play out. So I think the market was looking for a reason to sell. I've been saying that for weeks that the market felt tired. It felt heavy today. Well, all we needed was a spark, and that sent that sucker down. So before we get on to the carnage of Friday, let's take a look at some broader macro stories. First, in America, we have the government shutdown continuing with federal layoffs starting on Friday. And I think that was 4,000 jobs that they were laid off with the promise by, I think his name is John Vaught, the OMB director, that there's going to be even more layoffs and they're going to be not furloughs. They're actually going to be layoffs, RIFs, reduction in force. But that didn't seem to really bother the market this week. There is chatter that the layoffs will continue, or I'm sorry, the shutdown will continue until after October 18th. The Democrats have a rally planned in Washington, D.C. I don't know. I think it's called the No Kings rally. It's retarded. But anyway, the Democrats, Mr. Schumer does not want the shutdown to end until at least after October 18th, because the hope is that massive amounts of people will show up for the rally, and that will cause the Republicans to blink. I think that's sort of stupid because between now and then, the federal government can lay off a lot of federal workers. You know, it's unfortunate in America that so much of what happens is for political gain, while we have people, not getting paid now. Additionally, Friday, and I'm looking at this chart here. Friday we had a little bit of news towards the end of the day. Yeah, we had this huge drop and then another huge drop. Of what was that? Well, we're back to Trump tweetville. Trump tweets out right here, some very strange things happening in China. They are becoming very hostile. And one of the policies that we are calculating, I'm quoting him at this moment, is a massive increase of tariffs on Chinese products coming into the United States. Okay, so that did that. So that wasn't good enough, because then he came back and said, hey, November 1st is the day that the U.S. will be imposing a tariff of 100% on China, over and above any tariff that they are currently paying. And they're going to impose, the U.S. is going to impose export controls on any and all critical software. Well, that just sent the market even lower. Okay. So what's going on here? Well, China decided after agreeing to months ago, agreeing to a deal that would allow the export of rare earth minerals. China decided that they are going to try to control the export of everything that they export: rare earth minerals, um, energy products, food. I mean, there's the list is immense, and that triggered Trump. Supposedly, he said he got a ton of phone calls from other countries saying if that China was tightening the screws. Now they were supposed to be meeting in a week at the APAC summit. Let's see, the Asian Pacific, whatever. Trump then said he doesn't think that he'll need to meet with Premier Xi because there's nothing to talk about. Well, he did come out right after the market closed and say, wait, we haven't canceled the meeting with with Xi yet. So You got this is an intraday chart. You got the absolutely massive drop, and then he finished it off with this, and then somebody must have said to him, "Hey, do you see what you did to the market?" When I look at it, I am just shocked. Well, I'm not shocked, but one headline, two headlines sent the market down this much. Look, the market was primed to go down, had a hell of a run. I've been saying for weeks, it's been, I don't know how many months since we've had a 1% down day. Well, we got it. We certainly got it on Friday. But is this the start of something bigger? I don't think so. This is the first 1% daily drop in the last 48 days. Okay. And it is the biggest drop for the NASDAQ since April. Right. So a couple things are magnifying this move, both from a psychological as well as a market uh, mechanics uh, standpoint. First, from a psychological standpoint, there hasn't been a drawdown like this. So the market's become quite complacent that all they had to do was continue to buy the dips and put as much money into the market to the long side. Well, today was a nice reminder that that type of investing isn't always foolproof and that you're going to have days like this where the market just finds a reason, and this was a valid reason, okay? But the market will latch onto a reason and reduce risk. And that's exactly what happened today. Does it mean that I am uh, all of a sudden bearish? Absolutely not. I think that the mechanical structure of the market has a number of things as we enter the fourth quarter that are in its favor. First, in its favor is seasonality. So we get through the last couple weeks of September, first week or two of October, and seasonality says historically that the market's going up. Okay. Oh, by the way, as a side note, 98% of the time when the VIX goes up over 25%, within 2 days, the market has rallied. So I would expect a rally either Monday or Tuesday. And who knows what he's going to tweet over the weekend. There's that taco trade, um, which is Trump always caves. And he obviously was watching the market because he came out after the close and made that comment about, wait a minute, I haven't canceled the meeting with Z yet, and that sent the Nasdaq futures post close on Friday up, as I was showing you right here. So he's certainly aware of the market and the damage that he did, and he's not going to he doesn't want to be blamed for it. Okay, taking a look at we went from a record high to the most oversold. Okay, in one day. That's since April. That's an amazing move. Yes. And this is the VIX surging back above 20 for the first time in early August. Look, big whoop de doo. Okay. One day is not going to scare the crap out of, or shouldn't scare the crap out of you, because so much of what happened on Friday was purely mechanical, meaning algos and bots got triggered, right? So, according to Goldman, gamma backdrop is still positive. It means dealer hedging flows are going to still damp volatility for now, but the margin of error has really, really shrunk. We'll have to wait and see over the weekend what type of news or tweets that Trump comes out with. One thing that I am watching is credit markets are starting to crack as fears over private credit. We've been talking about this for a couple of weeks, primarily in the CRE space, with high yields tumbling. They're down 8 out of the last 9 days, and they broke below its 50 and its 100-day moving average, which was the worst week for high yield credit since the April Liberation Day crash. And then when we look at the credit spreads, they are also moving back up to higher levels. And this is the spread between investment grade and high yield. That would make sense with some of the private equity messes we've been seeing in commercial real estate. Yes? Interestingly, though, yields did not jump. So yields puked to their lowest level in over 3 weeks. If this was truly you heard this during 2008 contagion. There's no contagion here. Okay. I know that the Tricolor bankruptcy, which was a subprime auto dealer, people are talking about that and comparing it to Lehman. Well, not even close. Because I think Lehman's failure was 38 billion in crap debt, and Tricolor I think is 9 billion. So, not that it's not a big deal, but it's not going to trigger the same counterparty risk. Tricolor is not big enough to trigger the same type of Lehman-esque collateral damage and start dominoes falling. One of the interesting things that is going on in the market is silver is, futures. Okay, so silver trades in a couple areas, right? There's a futures market, betting on the future price of silver. There's a physical spot market, so people actually buying silver for delivery. And you'll have this usually at balance, pretty much a parity balance between the futures market and the silver market. Well, not currently, because currently what we have is backwardation. In fact, $3 of backwardation in the silver market. What does that mean? It means the spot price, okay, so the price that somebody would pay for delivery today of silver is $3 higher than the futures price. What does that mean? Well, that means the market buyers are paying $3 more per ounce than if they bought futures, which would deliver them the silver at a later date. Hmm. Arbitrage? Yeah. Well, what's going on? Well, the reason why you're going to make $3 now, or you're going to pay $3 more now for immediate delivery is because there is a big demand for silver physical. So what does that mean? Well, could be a couple things, which I think it's all of these things. Well, two of them. Supply constraints. So physical silver is scarce, and that's driving up the immediate demand, which is driving up the spot price, which is what's causing that $3 in what they call backwardation, where it costs more to buy today silver for delivery than it does to buy it in the future. It does not mean that the future there is the market belief that silver is going to go down. It means that right now there is an issue in the market where they traders must have physical silver. In fact, what it is I had seen reports from Bloomberg that silver traders were flying the physical metal over to the LME. Why would they be doing that? Well, there is a massive short position on silver right above 50 or $51. Futures market is being used to try to drive the price of physical silver down. It's having the opposite effect because traders are figuring that out. So while the futures market is $3 lower, they're trying to drive it down because this is a battle at $50 to $51 a share, or $51 an ounce. If they can pop it above $50, there is the potential for a massive short squeeze in silver. So the imbalance in the market right now in silver, we're long silver, not heavily long. I don't know if there's going to be a short squeeze in silver, but certainly with the backwardation that exists, the ingredients are there for that to happen. All right. Crude oil got clubbed like a baby seal. It was down 4% on Friday. Now that's on the back of the Israeli Gaza peace deal. And I was making a comment to our traders in the beginning of Friday. I thought there should be more of a rally based on Israeli Gaza peace deal. And the fact that there wasn't was sort of telling in the morning. So we're back below $60 on crude oil, WTI, Western Texas Intermediate crude. The takeaway from this, I think, can be two things. Number one, oil drops when there is perceived future demand softening. So if it's not believed that the global economies continue to grow, then oil will drop. Then what also hit it was the China tariffs comment. Okay. Because if there are tariffs, if he puts them in place, what are you going to see? Well, you're going to see the market perceives that to be with China being the largest exporter in the world. If Trump's tamping that down, it would slow down economic growth. And if that happens, there'll be less need for oil. That's why we're seeing that go down. So what this graph is showing that there is a ton of, when I say mechanical, I mean automatic, deleveraging and exposure sitting out there between options and leverage ETFs. This green part is if the market goes up 1%, 2%, how much forced buying would there be? Well, not a lot. And that's one thing I've been commenting to my members was, hey, you know what? What's the catalyst going to be to drive this market higher? There is no catalyst. At least there wasn't until after Friday, before Friday. What's more concerning is on the short side or on the downside is there is a point here, and I'll go over the levels, that forced selling because they need to delever. So they need to remove risk and leverage from their portfolios. It's automatic, by the way. Look at all the selling that would have to occur. Now, do I think that's going to happen? No, I don't. I really don't think that's going to happen, but I don't know. We'll have to wait and see. One of the things that is coming up is earnings season, and I pulled this chart up. I think it's from Goldman Sachs. So these are the earnings dates. I'm going to share this with my Discord members, and it's broken up in categories, right? Consumer and utilities and all of that. But it shows the most crowded longs and the most crowded shorts. I think this earnings season is going to be very good because I think the bar is set really, really low. I think now a lot of froth was just taken out of the market on Friday. Um, and I'm gonna show you. We entered Friday and we were overbought in the market on many metrics. What happened? The market sold off. So what did I see? Okay, so we had record leverage ETF that's been reset. Record dealer delta reset. Overbought QQQs reset. So all the concern about, oh my gosh, the market's too high and look at the crowded positioning to the long side, that's been cleaned off. Do I think it was intentional? Oh yeah, absolutely. I think this sets up it gets some of the hot air out of the market, which sets us up for a fourth quarter rally, which I still think is coming. I don't know how many days of this market down we could get. And I think, as I said, a lot of it depends on what Trump tweets over the weekend, as well as how the market opens on Monday. I do suspect we're going to get a down day on Monday. I see people out there, oh my gosh, it's going to be Black Monday again. I don't know. And if it is, I don't care. I've got 25% cash right now. We've been scaling heavily. I'm at 15%, 16% on EOSE. I can tell you if the market's down on Monday, I'm going to go straight in the market by another 10% allocation to EOSE. Why? Because if I can get that EOSE down below, $13, and I can buy calls on that, absolutely. I want to ultimately be back over 30%. I'm not there yet. I think this has provided a buying opportunity for those who are willing to look out further than the next 2 or 3 days. Yeah, 2 or 3 days, right? Let's look at the overall markets. S&P 500. Look at that. It wiped out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of gains. Actually, we can go all the way back to here. Almost a month. So this big candle wiped out almost a month of gains. But if we zoom out, let's see here. This is your 50-day moving average. It's going to bounce there. We have traded below that in the past. This is the weekly chart. If I were just to show you this absent of any news, what would you say? That was a bad day, but uptrend's intact. My short will not happen until down here around 6,200. Not going to happen. Okay. This is not, in my mind, a time to be jumping ship. In my career, I've always been very pragmatic about this. I've been through so many different styles of bear markets. Um, 2008, uh, 1999, 2000, 2001. I mean, you all know my history. And the one thing I know is that the day that it happens and even the following days is perhaps one of the best times to be buying, okay? I'm not there yet where I'm going to go in 100%, but there are, as we look at through these charts, uh, when when I say a rising tide lifts all ships, well, falling tide, no, lowers all ships. So there's things that got beat up on Friday that had nothing to do with the Trump tariffs. So let's take a look at Qs. Another massive down on the Qs. However, if we put that in perspective by looking at the weekly chart, really, everyone's freaking out about this. Uh huh. Um, Garbage. Looking at the VIX. First, we're going to look at the daily. Okay. Oh my gosh, goodness, it's over 20. Once again, who cares? Because if I pull up the weekly, this thing doesn't even register back to the April Liberation Day spike. Then over a year ago, this massive spike. So again, taking it in context, I mean, if all you have is Friday's market action, you probably are going to be freaking out. But I encourage you to pull back and look at the weekly chart too. Russell 2000. Oh my goodness. Just getting crushed. Well, not if we look at the weekly. Hello. Yes, this is a reversal, right? It's an engulfing candle. So we're effectively back where we were. Oh, I don't know. Let's say September the 1st. Do I think this is the start of this? I don't know. But if it is, we'll adjust and trade accordingly. It's, you know, people have this desire when things like this happen to do something, right? Buy something, sell something. You know what? It's very difficult to do that until the dust settles. And yeah, there are people probably out there who went completely flat. I doubt it. I'm not that type of person. I want to see data. I want to see how we open on Monday. I want to see how we trade through Monday. I'm not positioned that, I mean, look, if I lose 50%, 50% of my portfolio, I'll still be up 30% for the year. Whoop de doo. Not a great year, but I'm not going to be negative. And the overall portfolio would give up, I don't know, instead of being up 500 and some percent, I'd be up 400% over 2.5 years. You know, I have that view like that because I'm not looking at in straight line extrapolating every single day the market moves, that if it continues in this direction, then I'm going to make a gazillion dollars. Or if it continues down like Friday, if I get 5 more days like this, then the market could collapse. And hey, you get 5 more days like that, and you're going to have a freaking screaming buy. Okay. All the way down to 2200, maybe. I don't think that's going to happen. If it does, so be it. We'll trade and get back in there, and we'll make additional dollars on the upswing. This market's not about to enter a bear market. It's just not. Not in the fourth quarter. Okay. Let's take a look at some individual stocks. Oh yeah. Um, Gold obviously is just screaming higher, and we continue to try to get long gold. Let's look at Tesla. Tesla. What do we have here? This is the daily chart. 400 is support. 400, and until we break that, um, I'm still looking to the long side. Here we go. Could this become a double top? Absolutely. But to try to predict that that's exactly what's going to happen, I have no idea. Not when Trump is involved. Yes? You and I both know that he does not want this market down. Okay? TNA is how I trade the Russell. I'm not even close yet on TNA. Uh, I'm not looking short, period. Okay? This is a very tough area to get through. Well, as we were entering this area on the weekly, I've been saying, boy, this market feels tired. And what's going to be the next catalyst to drive it higher? Well, we just had it. What was that? Oh, we blew out a tremendous amount of frothiness in the market, and we have sufficiently scared the crap out of the market. So there's not this exuberance now. That was needed to happen. And I'm glad that happened now because it does set the table for a fourth quarter rally. Think about it. If exuberance was high and it just got punched in the face, that's good. As I showed you in terms of forced selling that went on, okay, that forced selling is going to have to find a place to go and it's going to go back into the market eventually. Timing, as always, is key. Yes? Silver. Looking at silver on the daily basis, we remain long silver. Nothing to do. And they're going to continue to try to, as I said, the futures market is being used to try to drive the price of silver down, and it's not working. It's actually driving the price, the current price up. So there, as I said, there's a massive short on silver. Let me show you the silver chart here. Right above $50. Look at that. Unbelievable. Weekly chart looks like this on silver. Could this be a reversal candle? Sure. The futures market, are they going to be able to uh, depress or control the price of silver? Temporarily, but blood is in the water for the shorts on silver. And there is a huge, massive battle going on. And once that plays out, then silver is going to break free. I think it's going to go even higher. So that is one thing that I'm looking perhaps, not perhaps, to add over the weekend. We are not in PPTA. Oops. But it's a stock that I follow. Finally broke out of all this garbage consolidation and breaking higher. Probably take a look on Monday night to see if we can get long. PCT, I actually closed my final runners on Friday morning. I missed this here. Uh, Beautiful close. And I'll go over the trades I did here shortly. We are in Marvel. We are down to runners on Marvel. And unless I get back above this 90.52 level, I'm out. I'll get out with a small gain. Monster Beverage was one of our first trades for our paid Discord members, the trade idea. Remember, all I do is share ideas. I don't expect anybody to follow what I do since it's for education and entertainment. But Monster performed really, really well on Friday. And um, looking at, I wanted to pull this up here. Okay. So if you look here, we had this level right here ish, 67 ish. And it tried to break, tried to break, tried to break. There's the break. So what do I expect to see? Well, we could get a retrace down to here before this thing launches higher. I have no idea why Monster Beverage would be going up. Makes no sense to be. Mankind completed a deal this week. Their acquisition, uh, who was it? SC Pharmaceuticals. And according to my experts, that's going to provide um, revenue on a continuing basis. They're trying to make the switch from a pure biotech company to a more of a pharma-based model. Uh, I really like the management. This is at a major support level. Why? We've got it at the 200-day moving average as well as the 50-day. If it's going to bounce, it's going to bounce here. Okay, Meta, all sorts of ugly. But when you look at it, it says Friday, Thursday, Wednesday, Tuesday, Monday. Oh my gosh, we closed effectively where they opened for the week. Watch. Look at that. Ugly. Found support here. I would expect a bounce. Google, not as bad as a day, not as bad a day, but yes, 256 was the high. They tried to hit that on Monday. Um, Obviously that failed. As high as 251. Now where are we headed? All the way down to 224 could be a possible drop. We'll have to wait and see. Galaxy. We are in Galaxy. I believe we scaled off to look at that trade. Galaxy got monkey hammered on Friday. But if I pull up the weekly, Hello. It's still in an uptrend. So, yes, I think this is probably going to bounce um, along with the rest of the market. Geo, we entered a short on Geo. We did scale on Friday for plus 41%. Uh, this is just an ugly chart. If you look at this weekly chart, we broke down this huge weekly candle here. I mean, support. Well, it's interesting because Geo has just been dropping and dropping and dropping. Well, we're in this gap right now. I expect the gap to close. That's down to 15, and then an all-time low at 13.59. I have no idea if we'll get there. I do know that there's no volume until about 1640-ish. So we have more to drop. It's like watching Chinese water torture here. This is very orderly selling. So and not not a high volume not high volume selling. Sorry. Here is Enovix. Oh, what do I see? Well, I had drawn this line, and I don't know how long ago, and that's where we stopped. So, is this headed downward? Not yet. I suppose a break of 1194. I'm not looking short on any of these companies at this point. Um, because, well, first of all, we're entering the meat of earnings season, okay? And so those are binary events that'll be coming up. But secondly, I believe the market's still in a mid to longer term uptrend. This is a much needed down event. The speed at which it happened can be concerning, and if we see that for another day or two, yeah, I'd be concerned. But at this point, I'm not concerned. There's one day. Let's see what happens. Cipher. Thanks to our Mr. Brock, we entered this trade on Friday. We did. I want to add more to this trade. Cipher was actually strong throughout the day until the very last hour or so, and so I'd like to add more to Cipher. We'll see if we can construct a trade to do that, maybe even on Monday morning. Ethereum. Ethereum also monkey hammer down below 4,000. Am I a seller? Absolutely not. Do I think you can get down to 3,500? I don't know. Maybe. I have dry powder if I need to add. So that obviously affect our BMNR. But where did BMNR stop? BNR is going to get sticky around this point of control. So do I see a BMNR dropping all the way down to 47, all the way down to 40? It could. Uh, if momentum picks up, sell momentum picks up, it absolutely could. And I will not be selling. I will look to add. So EOS has had some, I mean, very, very strong days. But if you look at last week, it's other than the Monday pop here, it's stuck in this channel here. Very easy to see. So until we break one way or the other, I'm still doing nothing. I have sold half of my EOS position, mostly my close in November 2025s and my January 26s. And I still own a lot of the 2027s, five and a halfs, three and a halfs, and two and a halfs. It's going to be tricky here with earnings coming up, but my goal and my intent is Monday or Tuesday. If we can get a break below, I intend to add an additional 10% of my total portfolios back into EOSE. If we pop higher, I'm going to do nothing. I'm going to wait. I don't know how earnings, nobody knows what they're going to report. I believe, as I said last week, that AO's stock, now listen, was primed for perfection. Why? Well, because it has had a really, really massive run and it's been on no news. Seriously, what news has there been? There have been rumors. There have been Twitter reports about felt deliveries and all of that, but there is no hard data. Hard data. Yeah. And so until I see hard data, which is going to come out of an earnings report or of a news release, this is concerning. Why do I think this happened? Well, I think that institutions wanted to get long. We saw massive volumes over 30, 35 million shares last week. And I think institutions want to continue to get long this stock. I don't know if it's on the expectation of somebody knows something. I have no idea. But I do think that if it doesn't hold the 1329 level, I think we have a shot. I want to get back in at 12, at the very least down to 12. So I'm actually hoping that Monday we open up um, just just crashed. Okay. If we get a limit down, okay, let's talk about this. You're going to hear all over the weekend, oh, limit down, Black Monday. Okay. So if it happens, it happens. I've been through that before. And quite frankly, that is, that's where, while everyone else is scared out of their minds, and that's where a lot of money is made. That's where I've made a lot of money on those types of downdrafts. In fact, if we had a limit down order on Monday, ooh, I don't know, a couple hours after the open, I will go long the market perhaps on a squeeze, as well as I will short the VIX. Putting it in perspective, I do not believe this is the start of a major downtrend. I, in fact, believe that this event on Friday was intentional by Trump to drive the market down, not as much as it happened. So I'm sure that concerned him. But ultimately, I think it was intentional. The timing of it was intentional, as well as the follow up tweet, and it's removed a lot of the overboughtness, right? The market was long in the teeth. We hadn't had a 1% correction day in since April. So there was complacency in the market. And I don't like complacency as the market goes up. I like what we had previously for the previous 3, 4 months, which is it's hated. The rally's hated. Well, now what do we have? Well, perhaps uh, we've got, well, not perhaps, we had quite a bit of that gambler's frothiness be blown out on Friday. All right. If you're hearing on the news, could be a Black Monday, which is a reference in 1987 when the 87 crash occurred. I don't think so. Yes, as I said earlier, people are going to be talking about Tricolor, which was a subprime auto lender that they're finding out there was tremendous fraud with. But I think there's only 8 or 9 billion of debt there that they're talking about. It's still a tremendous amount of money, but it's not Lehman-esque. Lehman-esque was at 38 billion. I see these experts on Twitter, and I'm going to be leaving Twitter. I think it's become a cesspool. But there, see these experts on Twitter that post, I was right about the market going down. Well, these guys, they post these comments like the market's ready to go down. And then, 3 weeks later, you get a day like this, like, see, I was right. It's such horseshit because they're not offering, if they were really good, they could time it. And we do time the market. So they would say, I think the market's going down and I think you should get out on this date. None of them do that. Okay. Zero, zip. When you read the news reports this weekend and you hear wherever you get your news, let's be careful that you're not getting caught up in all the negativity from so-called experts. They're not experts. Okay. They're not experts at trading. They're experts at offering their opinion. And if you listen to their opinions, there always is a way for them to be right because they don't give specific dates. They don't give specific ranges. How much will the market be down? Okay. If you tell me that the sky is falling, or rather it's going to rain eventually, and you can always say you were right. Well, that's all these idiots do on Twitter. And I'm talking about the professionals. And I'm not talking about amateur idiots that are out there, and you know who I'm talking about, that are just there to be angry and sociopathic and whatever. I'm talking about the people that work for Goldman and work for Morgan, or for Goldman, and Deutsche Bank, the big analysts, right? These guys get paid to write their opinion. They don't get paid to make money in the market. Period. It behooves them to try to latch on to the latest, market moving news and, oh, I don't know, blow it up out of proportion. Look, all those experts that are out there that are writing articles or writing opinions understand that they don't get paid to make money. they get paid to offer their opinion. And their opinion, then they justify it with whatever factoid they can pull out of the system. They are terrible at their jobs because their job is effectively it's going to rain someday. And when it rains, they get to say, I was right. Horseshit. They have no capital at risk. They're not responsible for their firm's money. And all they are to me is noise. Okay. I like some of these guys and what they say, and they offer some compelling insight. But most of it, if not all of it, but most of it is not actionable information, right? And at some point in the future, what they say probably will happen. Maybe not to the extreme that they've predicted. So they get to always be right. It's garbage. What do I teach? Price is the absolute best representation of all available information out there, public and non public, rumor, lie. So I follow price and I follow price trend. So when people are freaking out about Bitcoin, I'm like, really? You're upset. It just made a new high. Yeah, I saw people talking about the cycle high that we will not see 127,000 again for another 1,084 days or whatever it is. I don't know that. It's not a concern. I can't even think out that far. I'm managing my positions. I don't own Bitcoin. Well, I do own Bitcoin, but not any options or any ETFs. I'm not concerned. Okay. I still think that the structure of the market is supports a long move, okay, to the top side. And that's across all asset classes at this point, with the exception of oil and the exception of bonds. But I truly think that this now sets the stage for that fourth quarter rally. We may have a couple days more, I don't know, maybe a week more of this type of volatility, but there will be something. And guess what it's going to be? It's going to be earnings season. Okay. Why? Because the expectations for earnings this season are extremely low. So the bar for these companies to beat and to so called impress analysts is very low, depending on what happens with this China tariff thing. Oh, and that's another topic. All of a sudden people are focused on China tariffs. Hey, idiots. They should have been, we've been focused on China tariffs since, oh, I don't know, inauguration day. It wasn't going to happen overnight. Nothing got resolved. Okay. The market knew this and the market decided to ignore it. And then they got slapped in the face on Friday and they act. Almost every market participant acts as if, oh my gosh, where did that news come from? Heaven, heavens, I cannot understand why Trump would do that. They're, they've not taken own responsibility for their own actions. As I showed you last week, the market was not over levered. The margin balances were not at record highs. Professional positioning was not at record highs. Not even, it wasn't even at dangerous highs. So I think this is going to scare people. And that's exactly what I want. And I've seen this play out before that if I'm right, this will last a couple days, scare people out of the market. Hey, where do you think all that money is going to go that was selling? You think it's going to go into bonds? It's going to go into Bitcoin or Ethereum? Okay, we're in those positions. It's going to go into stocks too. When will it go there? At the wrong time when the market's already moved up. This is how the market works. So, uh, you know, I sort of found Friday sort of humorous. I was in meetings all day, but what I found humorous about it was that Trump reacted so quickly. He is not he does not want this market down, and he does not want to be blamed for it. So I expect some more conciliatory uh, tweets from Trump, okay, over the weekend. He might wait and see how the market opens on Monday. There's people calling for a limit down on Monday, which means the market would open such that they would have to do a pause. Yes. I don't think that's going to happen. No, 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 no. All right. Last week we didn't have a lot of trades. Last week I did take some stops. Cumulative portfolio up 79% for the actually added to the week. Overall portfolio is up 79% for the year. Got a total return of almost 515%. Average days held of 1495 days, and that's since May of 2023. So little less than 2.5 years, we've achieved that return. Right now, open trades, you can see obviously Ethereum, Marvel, BMNR. Actually, Marvel is not. I'll have to close that on Monday. It swung to a loss, but we've already scaled. There's our Geo, Monster Beverage, Cipher. If you look at where I'm at right now, I'm 44% in Ethereum. I've got 16% in EOS. I want to double that. So I'm going to look to add 5 or 10% Monday or Tuesday. Then I only have 15% in the market. I mean, it's of which I've got what? Well, I only have a little bit of a short position. So I'm looking at, of this 15%, I've got another 6% of that is either in silver or in a short position. And let's take a look here. And of that 15%, I've got, so of that 15%, let me take a look here. I think I've got 2% of that is in silver. Yeah, 2% in silver. Um, Only 13%. Oh, and then 1% in a short position in Geo. Only about, so that goes about 12% long, other than Ethereum and EOS. I have got quite a bit of cash sitting on the sidelines, 25% of my portfolio. So I'm ready to go. I want to add. I don't know if that'll be Monday. I don't know if that'll be Tuesday, but I certainly want to add to my long positions. And I'm looking at this not as a buy the dip. I'm looking at this as something much larger or larger, of blowing out some of the excess that was in the market. And what did it just do? It just forced selling, right? Again, that cash, do you think it's just going to sit on the sidelines and do nothing? They're not going to flip short. That cash is not going to flip short. If they do, they're stupid, right? Seasonalities in our favor, for they're in the bulls' favor. Certainly, interest rates are in the bulls' favor. We'll probably get another interest rate cut in October. Interestingly, the Bureau of Labor Statistics, I think, is going to release, even though the government shut down, they're going to release the day before employment numbers. Since the BLS is run by government and Trump's in charge, I would say that those numbers are going to be used to try to compel Powell to cut by 50 basis points, 50. So doesn't, yes, perception could change. They could cut by 50, and the market says, oh my gosh, he had to cut by 50 because it's so bad. Ridiculous. And if that happens, it's even, to me, a stronger signal to be buying into the market. But as I always do, I'll remain measured, focused, and opportunistic. What I know now, I don't think this is the time to be losing your mind over, a 2% drop in the market. It just hurts more because you haven't seen it in a long time. As momentum traders, we like volatility. Yes, and overall for the week, not only the market drop, but my Eagles lost, my Phillies lost, my Flyers lost. So it's sort of a shitty week sports wise. That's what I get for watching the games. But anyway, hey, we've had a great response to moving the Discord to private. One of the great things is I've been able to get rid of all the scammers and bots and the people that were sent to my Discord purposely uh, to spy, or I mean, it's just idiotic. There's some grown ass men out there. They're just complete morons. I think they're sociopaths, and that's part of the reason I plan on leaving Twitter. I just don't want to deal with them, even though I have them blocked. I just don't want to deal with them anymore. They're complete and total assholes, and I think they have mental illnesses. So I like to surround myself with quality people, and I'll be doing that probably through Substack. But yes, had an amazing response to the going to paid Twitter. It's actually made, or paid Twitter, paid Discord. It's actually made the Discord a lot better, because now people are paying a very small fee, and they're engaging, right? They're the people that want to be there. So I got no more looky loos. Um, I think I've been able to excise almost all the jackasses, and I mean, the community will continue to grow. Yes, I have a book coming. Yes, I still have edits to do on it, and hopefully by the end of this month we'll get that out. So, hey, I hope you have a great weekend. Thanks for taking the time. Yes, it's extremely early, but if you have any questions, you can go to my site, and there's a tab where you can actually click it and ask me a question, and I'll answer all questions. Okay. If you're interested in joining our paid Discord, it's $50 a month. Reach out to me on Twitter or send me an email actually to info at mrnotadvice.com. That's info at mrnotadvice.com. And I'll be more than happy to get you access. All right. Have a super weekend, and I will talk to you next week.
Every time that we showing up, get it while I'm living. All I ever hear is the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out. Get it while I'm living. All I ever hear is the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out. It don't get no greater. Feel like I'm on fire. Feel like I'm Johnny Storm.